ringtone. Set it as your ringtone every time you go to the store. You don't have the money. Don't buy it. Do not do it. It's not gonna do you any good. Hey y'all, welcome back to SoSaddity Nat, and today we have a different type of video. Today we're going to be talking about financial independence. This is something that I really care about because I do not think that we get enough information in our communities that talk about how to be financially independent without going into debt. So today I'm going to teach you all a couple of things that I know about being financially independent. I first want to say that I am not a financial literacy coach. I just want to share what I know and help the community in some way by sharing the knowledge that I do have about credit and loans and getting out of debt and things like that. So this is what my financial independence series will be about. So I'm going to be talking about the different experiences that I've had and things that I would recommend doing so that you don't end up being in the situations that I was in. The first thing I want to go over is like the most basic thing that you need to have financial independence. If you do not have credit, you cannot be financially independent. So credit is not something that is taught in school, especially like me. I'm an economics teacher and I just started working as an economic teacher, so I'm not sure what they know, but what I see that they know, they weren't taught anything about having a credit score or how to get credit. And I know a lot of people don't really know what credit is or how to go about having good credit and not messing up your credit and what factors go into having a credit score and things like that. So I want to take this video to go over all of those different aspects. So first I want to talk about what is credit. So by definition, credit is the trust which allows one party to provide money or resources to another party, wherein the second party does not have to reimburse the first party immediately. So in basic terms, credit is a financial contract that you have with another company. So like having a credit card. So the way that you use a credit card is the company, whatever company you decide to go with, will give you a certain amount of money on a card that you would have to pay back in payments. So you would make payments on your credit card. So it's basically money that you borrowed from someone. And your credit score basically tells other lenders how responsible you are, how worthy you are of having the credit and being able to borrow the money. So the title of this video, obviously you saw it already, is Cash is King, but Credit is Queen. You cannot do anything, especially if you live in America, you cannot do anything without credit. So like I said before, credit is one of the most essential things to having financial independence. So I want to create videos to share information that I know about having credit and getting a credit score so that we can move up in the world, so that we can be able to live the lifestyles that we want, that we deserve. Okay, so when we talk about credit and your credit score, credit scores can range from 300 points, which is kind of bad, or not kind of bad, really bad, to 850 points, which is really good. It's exceptional credit. So the benefits of having good credit score means lenders are going to trust you more, so they're more likely to give you more money. They're going to give you lower interest rates, so you're not going to be paying more than what the item was worth that you purchased. And you can also have the freedom to do whatever you want. You could buy expensive stuff with no money. You could be approved for any card that you want. You could get any personal loans that you want. These are the advantages of having good credit. With bad credit, you're not eligible to have any of those things. So another thing that I want to talk about is credit cards. So everyone knows what you could do with a credit card. I don't really have to explain what a credit card is, but no one knows when is a good time to get a credit card. I personally believe that the best time to get a credit card is when you're young. So if you're about 18 years old, that's when I think it's a good time for you to start looking into credit cards, because you should be financially responsible by that age. I know not everybody is, but once you feel financially responsible, meaning you have a job or flowing income, you know how to manage your money, and you know and understand what credit is. So you know that having a credit card does not mean you have free money. Credit cards are not free money. You have to pay them back. Once you understand those three concepts, I think you're ready and mature enough to get a credit card. I believe that people should start building their credit at a young age. The longer you have credit, the better it is, the better impact that it has on your credit score, if that makes sense. So having too young credit, too premature credit will negatively impact your credit score. And what that means is, hypothetically, if I was 18 years old and I wanted to buy a car, but I have no credit card and I've never been like an authorized user on anyone's credit, so I have no credit history, I'm not gonna be able to get a car loan because I don't have a credit score. So not having any credit will negatively impact you. So the younger and more prepared you are, the better. So 18 years old, you have a job or a flowing income, and you understand what credit is and how to use credit, I think you're prepared. So first thing is being young. The earlier you can get it, the better. The second thing I want to talk about is how to use the credit card. So, like I said before, you can't use a credit card and swipe it willy-nilly because you have a credit card. That's not how it works. When you should use your credit card, there's a rule, using only up to 30% of your credit card. With every credit card comes a credit limit. A credit limit is basically the amount of money that you could spend on the credit card. For example, say my credit card is $500, that's my credit limit. I would only suggest using about 30% of that credit limit. So let's do some calculations. 30% of 500 is $150. Never go over $150 on that credit card, and make sure you pay it back. So how I recommend using that credit card, you're 18, you have a $500 credit limit, and I said do not go over 30%. I personally tried my best not to go over 30%. Sometimes it's okay if you have the money in your bank to pay it back immediately. I will only use my card for gas. So I'll go ahead, and I know that I got paid yesterday. Instead of swiping my debit card, I'm gonna use my credit card to get the gas. And then I'm gonna immediately pay my credit card back so that I do not forget and that it does not accumulate interest. You'll start to accumulate interest on whatever you don't pay off. So what is interest? So interest is a percentage that they charge you based off of your credit score. So the lower the interest, the better. So if you have a good credit score, they're gonna charge you lower interest. If you have a bad credit score, they're gonna charge you higher interest. Okay, so real life story about interest, right? So when I was, how old was I? I was 21. I needed a new car. And I had been doing what I was talking about. I had a $500 credit limit on my credit card, and I maxed out my card and could not pay it back. So of course, my credit card started accumulating interest. And what interest means is they're adding money on top of the money that I owe. So it's like, I already told you I couldn't pay this. Why are you adding more money that I'm gonna owe to the credit card, right? So they're adding money every month, the interest money every month, on top of the $500 that I already maxed out, and I needed a car badly. So you know what I did? I thought I was so cute. I was 21, I'm about to sign off on my own brand new car. It's 2017. I walked behind all the way over to Toyota, signed the contract, had bad credit, signed the contract for the car, right? And then they go ahead and tell me what the interest rate on my car was. My interest rate was 22%. 22%. So, if I had good credit, my car note would be like $280 or something like that. I think that's like a decent price for a car note, right? You know what my car note was? $514. $514 every month I had to pay for the car because I had bad credit. Don't be like me. Listen to what I'm saying. Build your credit and then go ahead and do all the things that you want to do. So what I'm trying to do is teach you how to be financially responsible. If you're young, right, and you're getting your first credit card, make sure you know your limit, make sure you understand what it means to have a credit card, and do not go over 30%. I would even recommend trying to stay under 10%. Like only use it to get gas or to buy groceries or things that you normally spend cash on. Go ahead and make those purchases with that credit card. So like I said, making payments, right? You're gonna need to make payments on your credit card every month. There's a minimum payment that you can make, which is usually about $35, $40 a month on your credit card, right? So if you spent the $150, if you can, pay off the whole $150. But like I said before, we're not going to be spending money that we don't have on our credit card. So that minimum payment should not even faze you because you already paid off your whole credit card. You won't have anything due. But if you do decide that, no, I want to save my money, leave it in my bank, and only pay off the minimum and pay that $35 off, if you spent $180, let's do some calculations. You spent $180 on your credit card and you only want to pay off $35 a month. It's going to take you 5 months to pay off that $180. 5 months. And you know what's going to happen after the first month? You're going to accumulate interest. It don't sound like a lot, but over time, interest is going to accumulate and it's going to come back to bite you in the butt. Let's go ahead and pay off what you owe off your credit card right then when you spend it. If you do not have the money to pay it off right then and there, do not make the purchase. Do not swipe that card. You don't have the money. So once you've done all of those things that I talked about, now you need to start establishing your credit. So if you already have a credit card and you've already built your credit and all that stuff, I recommend checking your credit score frequently. So what I use to check my credit score is Experian. So it's one of the 3 bureaus that you could check your credit score in. So the 3 credit bureaus are TransUnion, Equifax, and Experian. So I have an Experian account. I went ahead and signed up for the free one. You don't have to pay for it unless you're like trying to fix your credit, but I just use that to check to see what's on my credit score and what loans that I still have to pay off and things like that. It's free and you can check it as many times as you want without impacting your credit score. So check your credit score frequently so that you can see what has been put on there. If you have any hard inquiries, any soft inquiries, it'll show up on there. So an inquiry is when like a company checks your credit score. So if you're getting an apartment or you're getting a car, or you're getting a credit card, or you're getting a mortgage, all of those things are going to impact your credit score. So those inquiries where those companies check your credit, it might decrease the score. Each time they check your credit, it's going to impact your credit score. And another important thing that you need to know is the reporting date on your credit. So what that is there's a certain date that your credit companies are going to report the payments that you made on your credit cards or on your loans and things like that to the credit bureau. So knowing that is important because you need to be able to pay off any credit card or make payments towards any credit loans or cars or mortgages or credit cards, things like that, before the reporting date. That's very important. If you do not pay by that date, it's not going to show any progress. It's not going to show that you're making payments and that you're using your card and that you're being responsible and you're paying on time. The last thing I want to say about having financial independence in regards to credit is having expensive taste or having expensive friends when you're broke. Learn how to say no. Just because your friends are going on a trip or they're going to brunch and they're going here and they're going there and they want to go everywhere, they want to go out to eat and all that stuff, does not mean that you need to go broke to keep up with your friends. Be able to say no. If you do not have the money, say no, because at the end of the day, you could go ahead and go on that fancy trip to Panama off your credit card, right? Yeah, you're gonna have a ball, but when you come back and you know you didn't have the money in cash or in your debit card or wherever to pay off that credit card, it's gonna come back to impact you. So I have a story, right? So I may do a video about how I was able to get an apartment, but before I was able to secure my apartment, that was me. I was that girl who would say yes to everything, go everywhere, knowing I had not one dime in my bank account. I had not $1 in my bank account, but I had a credit card. I was going swipe, swipe, swipe. Yeah, I want to drink. Yeah, I want to go there. Yes, I want to do that. But I had no money. I had no money, but I had a credit card. So when it was time for me to go ahead and move out and get my own apartment, you know what happened to me? I didn't have credit. My credit score was trash because I couldn't pay back my credit card. So I didn't have money to pay back my credit card because I would say yes to everything. And when it was time for me to go ahead and get my credit score checked to get the apartments, I was so embarrassed because I knew I was the reason why we weren't getting approved for any of the apartments that we wanted to get. I was the reason my friends had to settle, and I felt so bad. So that was what started my journey in building my credit. Like, I can't live like that. I want to be able to do nice things that I want to do. I want to be able to get the apartment that I want, the car that I want at a decent price. I want to be able to get a mortgage one day. And I can't do that without good credit. So I'm gonna help you guys and make sure that you guys do not end up in situations that I've been in. We're not gonna do that. After 2020, we all gonna have good credit. We all gonna have credit cards with money on it. We're all gonna have money in our banks to pay for our credit cards. And we're still gonna have money in our savings account. 2020, that's all we're doing. We're being financially independent. So if you're interested in learning about different topics regarding financial independence, please comment down below what questions you guys have that you might want me to answer, or what topics that you want me to go over in this series. Thank you so much for watching to the end of this video. I will see you in the next one. Bye.